Hello friends, so we are done with this group 1 CA final January 26 examinations. I hope all of you have written well, and now we are going to analyze the AFM paper, Advanced Financial Management paper for January 26, and we will try to understand what are all the key takeaways from this examination so that we can correct our mistakes for the upcoming May examination. And those who are writing for first time, okay, they also know how to prepare so that they can prepare well for the upcoming May examination. Shall we start discussing? Okay. See, we will start with MCQ. MCQ questions. See, question number 1. See, I have classified this like this: old and new. The questions which are already in the given in the institute module, be it in study material or in RTP past examination question, MTP, any source, any past institute source, I have written as old questions, existing questions, okay, which will be available in all the question banks and other sources. Then there are few questions which are tested completely new in the sense you cannot find these questions anywhere from the institute sources or anywhere in the question bank. They're totally new question. This attempt they've asked few new questions. That also we will try to understand. Thereafter, we will try to understand for how many marks they have asked for existing questions, known questions, and then new questions, how many marks they have asked in this attempt. Thereafter, we will try to understand, we will even try to segregate, okay, from the existing questions, what are all the questions that are, rare, or what are the questions generally, students will try to skip and are unique, okay, that we will try to understand. So, in the old existing question itself, so we will try to segregate how many questions are easy to solve and how many questions are little bit challenging to solve. Just because it is existing question doesn't mean that it's straightforward. Are you understanding? That is the thing. Next, even in the new questions, if you see, even though it is asked for the first time, okay, then also if you see, it is easily, few questions are easily doable. That also I will classify into easy and difficult based on the question. Shall we? Okay, see, take question number 1 here, MCQ. We'll start with MCQs first, what they have asked. See, MCQ first case scenario, you have 5 case scenario. They are asking 5 case scenarios, and each case scenario based question contains 3 questions which carries 2 marks each. So 6 marks will be the weightage. See, first question, reverse repo transactions. Okay, it is available in money market instrument. Okay, one question which also I have put in video also, security valuation chapter, you can find it. Okay, money market instruments, ditto, same question, data changed but almost same question, repo and reverse repo transactions. Okay, dirty price and clean price of the short term instrument, this you can find out. That is given question or existing question, you can find it. That's how I classified here. Can you see this? Okay, question number 1, old question, repo and reverse repo, money market question. Next, question number 2, what they have asked. Question number 2 is related to forex. Okay, forex, that too. Fate of forward contract, early delivery, I think they have asked. Yes, however, received bank determinant of remittance before the due date. So, early delivery based question, and prime lending rate is given, interest on inflow or outflow, you need to find out, swap gain or loss. All these things I have also discussed in the class. Okay, known question, study mat question, straight away given in the illustrations of the fate of forward contract. From there they have taken. That is also known question. Okay, next question number 3 in the MCQ case scenario, what is being asked? See, here we are not going to discuss the solution in detail. Wherever there is new question, I will tell you how to solve it or how to approach the new question. This we are going to discuss predominantly, right? Next, case scenario 3 given. In this case scenario 3 also ditto, copy paste question, there is no change. Okay, the same question taken from study material. Okay, now all these data given, you need to find out. This we will assume as market data, and you will find out RM. Right, you will find out RM, and for each security you will compute and then find out RM. From there, okay, you will find out risk-free rate, average beta, all this beta given, and they have asked first step is to calculate RM anyway. Next, risk-free rate of return by taking simple average, which means simple average of what? Beta, you will take a simple average, which means 0.6, 0.8, 0.6 and 0.01 given, divided by 4 you will get the weighted average beta of the portfolio. Then return of the portfolio 15.7 given, equate it, return of the portfolio 15.7 is equal to RF plus weighted average, simple average beta which you got by calculating that beta into RM minus RF, you will get the RF. Next, what they are asking, return of security C here, Okay, return of securities E, RF plus beta into RM minus RF. Expected rate of return, required rate of return only interchangeably they are using expected rate of return. Beta into RM minus RF you can use and solve. Okay, question number 3 is there. Did to copy paste question, nothing new. Case scenario 4. Okay, case scenario 4 also old question only, existing question only. See here, Ujjwal Bank Limited, this question. Okay, MPA and CRR is the only adjustment to be done. This also is in mergers and acquisition chapter. Mergers and acquisition chapter, there is a mergers of bank based question, and there you have you will find the ditto same question. Here what happens, the CRAR is negative, okay, because of the thing. So which means here minus only thing is minus 2 by 12, okay, into 20%, whatever it is, because here CRR ratio is 20% and NPA ratio balance that also 20%. If you see, okay, the weightage for this swap ratio is given as 20%, 40%, which means already 60% gone. 60%, 20% CRAR and balance 20% will be the NPO ratio, which means equal proportion. So minus 12 by minus 2 by 12 and 2 by 12 NPA will be calculated like this. So not favorable now. So 2 by 12. Okay, minus 2 by 12 into 20%, then 2 by 12 into 20%, which means this will be negative value and this will be exactly positive value. Both will get cancelled. Hence the balance number, whatever you get, okay, will be the swap ratio. Simple and straightforward, you can find it out. Then based on the swap ratio, you will find out total number of shares to be issued by the acquiring company. Then post merger EPS. Okay, post merger EPS nothing but post merger earnings divided by post merger number of shares, total number of shares. Okay, this is all about question number 4. Okay, already known question only, hence I'm not discussing anything here. Question number 5 is a totally new question, I think. Yes, question number 5 is fully new question. Okay, but you tell me from where this being asked now. This is very basic question, not even related to finance. Okay, we can classify it as, I can classify it as capital budgeting, even though it is shameful to categorize it into capital budgeting, but still, okay, there one sensitivity analysis based question, we can find out the sales minus variable cost contribution. This to be precise, this costing basics, CA inter costing basics question, I don't know why they have put it anyway. Okay, simple case study. Here PQR is considering 2 products and all, and it's certain that 2000 units product A. Okay, sales of product A is given, contribution margin of product A is given. From there you need to fixed cost is given, and from there you need to find out product A's profit. Very simple. Okay, you have sales and they have already given contribution margin, which means straight away find out the contribution minus fixed cost will give you the profit. So for A, how much is the profit? Okay, for B, if the sales units is 1,40,000, how much is the profit? Okay, per unit contribution for B is 10 rupees, which means 1,40,000 into 10, 14 lakhs will be the contribution, total contribution, minus 6 lakhs fixed cost, 8 lakhs is the solution. Like this you need to find out. Okay, I don't even need to discuss, simple and straightforward. Last, company select product B, the expected value of profit. Okay, this also is simple, because you apply the probability, you will get 50,000 into 0.25, 1 lakh into 0.5. Okay, 1,50,000 into 0.25, which comes to 1 lakh, I think, weighted average. Then 1 lakh is the total expected sales, weighted average expected sales into what is the contribution in product B, 10. So this is 10 lakhs minus fixed cost. Okay, again 4 lakhs is the solution. Okay, all this I'm just briefly discussing. Now this is new question, but you tell me whether this is easy or difficult. Not at all difficult, very simple and straightforward. Of course you need to remember that concept. Anyway, income statement you need to remember to solve this question. Now we'll move on to that descriptive. So MCQ, if you ask me, MCQ only the reverse repo and reverse repo transaction. Okay, there might be some confusion if you are not thorough with the concept. I think all the other part you can easily solve. Portfolio management directly taken from the study mat and they have put it. So I don't think there is any issue. Even this question is study mat question only. So if you have done the proper revision and you have solved all these questions, you will be comfortable with the MCQ part. Now descriptive part, moving on to the descriptive part. See, if 1A, okay, question number 1A is about mutual fund bonus scheme. Okay, it is about bonus scheme, and this is little bit tricky question because, okay, they were asking reverse working, I think. Yes, average annual yield is given. Okay, it's a copy paste question from your material only, but only thing is they have changed the data, which means earlier one of the question, I think you need to find return. You need to find annualized return for the question. That is what it is done in study mat, I think. And now they have given the yield, which means they have given that also annualized yield. In my lecture, if you see, I have told you that yield, holding period return and annualized return. The average annual yield, the last step of the solution, they have given in this question itself, which means they are asking, they are telling average annual yield. From here, you need to compute holding period return. From there, you need to compute, okay, very simple, the closing NAV given. The closing number of units you need to compute. Closing number of units you need to compute at the end of third year, which means opening number of units given, not given, not given. This is the question. Are you all understanding? See, opening NAV is the question. For that, opening NAV, we need to find out. For that, okay, now whether they have given number of units, nothing given. They have given number of units, nothing given. 25 lakhs, okay, where is that? 1 second. Yes, they have not at all given any amount. Right, this investor is investing 25 lakhs rupees. That is the only data given, which means very simple to start with. You start from average annual yield. From there you will because you have you will compute holding period return. After you compute holding period return for this investor, 25 lakhs was the initial amount he invested. From there it grew to this much percentage. You will find in percentage terms, you will find the maturity value of the 25 lakhs. This maturity value divided by closing NAV will give you closing number of units at the end of year 3 or 3 years or 2.5 years, 3 years. Yes, 2.5 years for this investor, I think. When this investor purchased investment of 20 in the scheme at its inception. So, start of the scheme itself he purchased, which means around 3 years now. First April 19, okay, 20, 21, 22, 23, 24, 25. Sorry, 6 years. 6 years, right. For 6 years, this is the return you will find out. 16.8% annual return. Holding period return for 6 years you will find out. Total return. That, okay, 25 lakhs was the initial amount. That compounded to that much amount, right. And that amount divided by 110 if you do, you will find out the closing number of units. From there, okay, what this closing number of units is not the only thing. Yeah, this unit you achieved after receiving 2 bonuses in between, which means 2:5 you received 1 bonus. Okay, on 30th September. On 30th September 2021 also you received 1:4 bonus. You have to reverse calculation. I don't want to discuss all the solution here. Okay, it's not an issue. If you want, I can do a separate video for that. That's not an issue. Now our concern is to analyze the paper. So here they are asking us to reverse working. So here only I think students would have got confused with some of the numbers. If you have done it well, no issues. Okay, this is the reverse working question. From there you will work out to opening NAV. That is what they are asking. Next question number B, a B part, question number 1B. Okay, routine computation. This is straightforward. Merger and acquisition, basic question. Here I have put it. Okay, MF bonus scheme reverse working. Existing question only. This is not new question. Why? Because the bonus scheme, if you understand the concepts well, then it's not at all an issue to arrive at the opening NAV from the average annual yield. That's not an issue. I think it is a doable thing. Next to 1B you have mergers and acquisition, basic question. The promoter holding, how much is the promoter holding, how much is the non-promoter holding, all this. Okay, one question is there, simple question. Here 75% is to be restricted, so balance he has to sell out. This question is already there. PE ratio, bonus ratio, market price, all this is given. Straight away, straightforward question from the study material. Copy paste question. Now come to C part. This question is regarding strangle strategy. Option chapter, strangle strategy. Okay, I told you straddle, strangle, okay, butterfly, all these things I used to discuss in the regular batch. There I have discussed the strangle batch. Even in revision lectures I have discussed the strangle strategy. But one thing, if you notice, okay, this is straight away taken from question answer, your study mat. There is question in your study mat which is a ditto copy paste question till here. The first part of the question is ditto copy paste question, no issue. You will score 4 or 6 marks as question. I think question 6 marks weightage. 1 second, how much is the weightage given for this question? I think it is asked for 4 marks. Okay, only 4 marks question. Right. Now the issue is the second part of the question. The second part of the question is very crucial. Determine the upper and lower break-even points for this strategy. This is newly asked. Okay, this they have not asked till now. And anyway, we used to discuss on regular lectures. This is nothing but a concept called as, okay, break-even FSP. I used to discuss the break-even FSP. In case of strangle, it will be a range. There will be upper number, upper break-even FSP, lower break-even FSP, within which your profit will be, okay, within which you will be profitable. If you go above that, you will be, or below that, you will be incurring loss. All these things, or chart pattern, I have shown, I have shown you in the regular lectures. There it is available. Okay, I also used to think why we discuss all these for these many hours, but here, okay, at least 2 marks they have asked. Anyway, this is very, very important. Okay, so break-even points also they have asked. This is why I tell you, expect the unexpected. This was never expected because, okay, they have linked this break-even FSP within this triangle strategy. Okay, very good question. This is new question. In the second part alone new, but predominantly old question. Hence I put it in old, and I have given new adjustment I have given, which means old question only, but certain new adjustment given in the question. Strangled with break-even FSP. What is the concept where you can look into? I have written. Next 2A, question number 2A. Okay, see. Question number 2A is about, see. Yes, Forex chapter. This question is Forex chapter and ditto copy paste question. Study mat you can't find this 1% discount question, I think. Okay, you can find, but this question is available in institute source question, past RTP or past examination question. This is a past examination question, no doubt, repeated question only. And this question, okay, leading and lagging strategy, which means you pay immediately, which means you can lead the payment, or you need to pay after 60 days or after 90 days. Due is 60 days. If you pay immediately, it is leading. And if you pay after 30 days from 60 days, which means from today after 90 days, if you pay, this is called as lagging strategy. Leading and lagging, straightforward question. Okay, I have discussed it. Nothing to discuss here. Okay. Next question B, 2B. Okay, here 2B I have given old question only, new adjustment, sorry. Here 2A, old question, and Forex leading and lagging strategy given. 2B, old existing question only, new adjustments are given in this question. Okay, see. This is question about external funding requirement. Okay, I have put it in miscellaneous topics. This question in our module, you can see it in miscellaneous topic. Okay, few authors have put it in security valuation. Anyway, it is, it's a combination of all these chapters, so you can find it. But this question is there in the practice manual. You can, old practice manual also, you can see this question. Okay, external funding requirement. This is there, all this data given, balance sheet given, and summary income statement given, all this given. Only thing is, external funding requirement you need to find out, and new equity is not required to be issued, which means there is no fresh equity issue, and you will only fund the new capital through raising debt. This is the only thing. Okay, now if the company is operating at 65% capacity of usage, and if company is operating at 95% usage, which means capacity usage only the new adjustment. That's all the new adjustment, which means total fixed assets in the balance sheet 4,000. Out of this, only 65% okay should be considered. The sales also will be proportional to the revenue generated will be proportional to the fixed assets, because that is only capital, the asset base only will generate the revenue, which means you should consider only 65% and 95% capacity. Using that, you compute the normal external funding requirement and find out the solution. This is also straightforward, doable. I think very much doable only, but of course new adjustment is there, hence I think the students will feel little difficult to do. I think all these questions in this January 26 attempt, I felt that okay, new questions were there, that is fine, but I felt the paper was little lengthy. Generally little lengthy. It is very lengthy, because if you see, normally AFM paper will never be this lengthy. Now okay, in most of the questions they have, in some of the questions they have given reverse working, some of the questions were totally new, so students need time to adjust to the paper. I think they would have run out of time. Okay, so that is the only issue. Next 2B, okay, miscellaneous EFR, external funding requirement question. Next 2C, okay, it's a totally new question, real option theory. Totally new questions which they have asked related to real options. Okay, real option and difference between financial options and real options. Okay, what is the difference between financial options and real options? Underlying asset, okay, payoff, exercise price, approach, all this is there and given in the module. Institute study module, study material, it is given. But of course, the question is totally new, taken from material itself. Okay, this is new. Anyway, 3A question they asked related to futures and option derivative question, totally new question. Okay, one profit and loss question combining both future as well as option they have asked. Okay, and that is a totally new question. See, question number 3A, this question, a speculator purchases May futures lot of 125 shares at 7750 and chooses to write BFL 7790 May call option with premium of 30, lot size of 135. What this person is this speculator is doing now, He is purchasing May futures at 7750. What is this purchase price? Futures purchase price 7750. As well as he is writing a call option. Okay, call option seller as well as future purchaser. Are you all understanding? This is the transaction he is taking. And as on May 18, what happens? Spot price rises, so the future price rises, and call premium also rises. Future price rise to this much 7780, which means, see, very simple. Future, he has sold future, bought future, he have purchased future, which means buy price. What is the buy price? 7750. Sold at how much? 7780. 7780. This is the what is the 30 rupees the profit. Okay, are you understanding? Into 125, which means this will be the total profit. But from this profit, they have given one adjustment. Brokerage of the transaction cost, what is that? Brokerage cost 0.02% you should reduce. Now here, some students might get confused with where to apply this 0.2%. Okay, it is applied to the transaction value. For the transaction value of the futures and strike price net of the, they have given the transaction value. Now how to get the transaction value? See, very simple. Here 7750 is the price you purchased, right? So 7750 into 125 lots totally, whatever is there, into points. This is okay, this is one amount, which means purchase amount, like how much you paid to buy the value, right? Futures. Now there is one more data, 7780 selling price now, 7780 into 125. This is sale value. The transaction cost will be applied, okay, brokerage cost will be applied as for purchases as well as for sale transaction. Total transaction value, the 0.02 you will apply, 0.02% you will apply, and find out the total brokerage cost you will reduce. From here you will reduce, you will find the, okay, net P&L. Are you all understanding? This is for futures. Same way here, option also tricky. What happened? You have written May call option. I am discussing this question alone because this is totally new question. That's why discussing briefly. Okay, see. So here what happened? 30 is the premium. You have call option. You have written call option. 30 will be the income for you. This is the premium you will receive. But the point is you would have received 30, but 30 appreciated to 36, which means 30 became 36 for a sell position, which means 6 rupees loss. That 6 into 125 becomes a total loss. In addition to that, you need to purchase brokerage cost also. Are you understanding? So profit and loss futures net of transaction cost, profit and loss options net of transaction cost, overall profit with both the position net of the cost, which means future you made some gain, I think. Yes, future there is gain. Option there will be loss. Always you have written at 30 and the price premium increased to 36, so there will be loss, and that you will adjust, which means net gain or loss you will verify, and you have to write. Next, total to brokerage cost which incurred for futures and for option. Both the transactions you will find out, and you will reduce and find out the net P&L. Are you understanding? So this is a new question, overall new question. So I think if you have done it well, no issues, but no worry. Okay, everyone, see, if one question is new or difficult, everyone would have felt the same. It's not only few students. Okay, all over India, all the students will have the same difficulty to answer it. Okay, so paper correction will be little more lenient, I believe. Next, following are the direct quotes available in the international market. Okay, GBP pound 1. This question is related to currency arbitrage. Currency arbitrage. Okay, see, currency arbitrage is a study mat directly taken from study mat only, and there's nothing to discuss apart from one point which one of my students pointed out. Okay, here the quotation given for euro 1 is there na. See, very simple. Here pound euro per pound 1.2950 divided by 1 point, which means 0.65. Now how you should write 1.2950, okay, 1.2965. This is how you understand the quote. Are you listening? Now next, that is also straightforward. The problem is the third one. If you notice, okay, here also if you see 1 pound is equal to 1.6025 and 1.6000, which means this is, yes, bid rate and offer rate, no issue. That is also not an issue. The main issue is this, the third quote. Okay, if you see 1.2375 is there, then how you can read this? I think there is a printing mistake in here. Genuinely, I believe it is a printing mistake because it should be 1.2390. Okay, this 90, right? It should have been, simply 90 or 0090, right? Okay, now since they put 900000, it would be ideally 1.9000. Like this, it can be interpreted. Now we don't know until the suggestions are out how they are interpreting. Okay, but anyways, because the problem in this quotation is that the spread is too high. It cannot be like 1.900 and 1.2375. The spread is like running even in first days. This will never happen in practical scenario. So I also doubt that the institute real intention is to put 1.90 as the offer rate. I believe it is 1.2390. The spread is 0.0015. Let's see how they solve it. That's the only thing. Other thing, okay, you can assume and you can write it, no issues. Okay, that's the only tricky area in this question. Anyway, interpretation is involved. Next, 3B, question number 3B, currency arbitrage, simple question only. There's no issue. Adjustment, the only thing which I wanted to discuss also discuss. Next, question number 3C, risk management, political risk based question. Okay, totally new question taken from theory, study material. They are taken directly from study material that I have given here. If you see, okay, C part, okay, this is like theory and case study based. They have given like case study, but ultimately they are asking identify 4 specific actions by host countries government that can signal the presence of political risk, recommend political techniques to migrate political risk exponent foreign currency. You can find out in the study mat. Okay, straight away given these points are given and they have coined as a question, but really it is copy paste question only. Next, new question. Hence I categorized it as new. Okay, now next 4A, interest rate options, caps and floor. Totally new question. Totally new question. Not for us. Okay, we used to discuss this in the introduction itself, introduction to risk management. Okay, interest rate options. So for introducing you, while introducing you to the interest rate options, I would have discussed, okay, from the borrower's perspective, from the depositor's perspective, what is the need to, okay, take the position in the interest rate options, take floor or caps, what is the benefit arising from floor, what is the benefit arising from cap, all this I would have discussed in the introduction part itself. Simple straightforward question only. They are asking 2 companies there, one company is borrower, another company is depositor. This borrower will have different payment terms. I told you now, the real interest rate PLR 5% plus 0.5% or PLR minus 0.5%, this only will be the transaction. I told you there are 2 things. One is the transaction will be happening at the agreed upon rate only, in the real interest rate only it will be happening. Okay, apart from that, he will take, for hedging purpose, he will take another position in interest rate options, derivative instruments he will purchase or sell, and using the derivative instruments he will hedge this. Also it can be also be speculative. Okay, this is possible. Here really he is borrower and depositor, hence the transaction is for hedging, you should understand. And premium is given, strike price is given, and the maturity date PLR, the maturity date interest rate is given, which you should take. Okay, all this data given. New question totally. I hope you would have solved. But anyway, we used to discuss in the introduction part itself. I think our students will not be uncomfortable with this question as such. Okay, next to 4B. 4B, so this is totally new question. This is old existing question only, EVA computation. Very simple and straightforward, nothing to be discussed. Here, see here. So 4B also straightforward EVA question. You can find out all this data given. Okay, and the net worth is to be adjusted. This is nothing but 2 different questions are there in your module. They have merged it. Okay, in one of the question, all this data would be given and asked you to, they would have asked you to find out EVA. And in one of the question, they would have asked you to adjust the net worth. The product has been patented. The product has been patented to the extent of 100 lakhs. Very simple. What you do? Net worth is 200 crores and the total debt is 400 crores. Total assets 400 plus 200. You have found out a 600. This is the total assets, which means, okay, the net worth is 200 and long term debt is 400. 600 would have been total. But the point is 100 which you missed out, which is not recorded now. Okay, that you will consider, and now the net worth would have been 200 plus 100, 300, and the total capital, okay, the net worth plus the long term debt, okay, which means 300 plus 400 debt, which means equity will be 300. Very simple. The 100 lakhs which is not, adjusted now from the net worth, so 200 will become 300 plus 100. This 300 will be nothing but equity share capital plus resource and net worth. Then you have 400 which is debt. So 300 is the equity portion, 400 is the debt portion. Debt equity ratio you can find out and thus solve the question. Are you all understanding? So this is to be done. Anyway, this is EVA question. They have merged it and asked the existing question only, no difficulty. 4C, totally new question, technical analysis theory. Totally new question and technical analysis theory. Where it is? Okay, see. Question number 4. Yes, this question, technical analysis, okay, chart patterns, all these things are there in your study material, diagram also given, okay, candlestick patterns, they have given all these head and shoulders pattern, okay, all these patterns are given, you can go through. A technical analysis based question, okay, new question, hence I'm, categorizing into new, but of course the theory for this portion is given in study material. Next, question number 5A, sharp optimum portfolio. Totally new question. Totally new question in the sense, see, last many years they have not tested this sharp optimum portfolio. We used to discuss in our regular lecture. Sometimes I also feel why I am discussing this. Anyway, not in asked in examination. I used to feel also, but they have asked in this attempt. Like just like Black-Scholes model, okay, which they never test usually, but sometimes rarely they put it now. Sometimes this is what happened in current attempt. Sharp optimum portfolio, the cutoff point, the big formula will be there, and I have put that in tabular method in our class. Okay, that is what they have tested. Old question only, study mat question is available. Okay, that's the problem. They have given question also. So this I cannot categorize into new, but I'll categorize into old question and difficult question. Difficult question in the sense students generally don't even look these questions. Okay, next question number 5B, GDR, international financial market based question, ditto copy based question, hence no need to discuss. Okay, there is nothing to be discussed, straight away taken from study material. Okay, international financial management chapter, you will find the GDR based question. Question number 6A, okay, old question but with new adjustment, MF with NAV computation. Here we are, see 6A, if you see this question is there. Old question only. Sometimes if you see in one of the question they have written the expenses directly, they would have given like this, but here what they have given now, 200 lakhs into 2% commission. Yes, 4 lakhs, 4 lakhs, this 4 lakhs will be the expenses you need to reduce. Okay, this they have given this way, but one of the question directly mentions the expense amount like this. Okay, this is the change. Then you have initial investment amount, marketing expenses, that also you need to reduce. Okay, cash balances, that is why they have given during the financial year the fund sold securities, yes, cost, and this also same adjustment. Fund subsequently purchased new security, this also same adjustment, same question. That's why I'm saying one similar question is available there. Okay, you can go through. Management expenses are regulated by SEBI and cannot exceed 0.5 of the average fund invested during the year. This may be new adjustment, but no issue. The actual management expenses are incurred this much, and out of which the only thing here is that you need to find out whether this is exceeding the limit. Okay, for that very simple, if you see the what they are asking now, see in average funds invested during the year, which means exceed 0.5 of average fund. Now opening fund value and closing fund value, they have given market value of the investment portfolio, they have given us this much. Okay, and market value of investment portfolio is this much. Then you have investment portfolio, opening value of the fund received subscription for 180 lakhs units is opening value. See what they have asked. Yes, average fund invested, which means average fund invested. Now initially how much you invest and closing value of your investment. If you see initial value of your investments, closing value of your investments, cash balance you will not consider, initial value of your investments, closing value of your investments, which means how much you purchased. Okay, during the financial year this much sold the securities worth, yes, 280 lakhs. Initial, yes, 178 lakhs. So initial investment, various capital market instruments, 178 lakhs, 1780 lakhs, this plus the closing value of this investments divided by 2, simple average only they have given. Okay, that you will consider, and into 0.5% if you do, okay, it comes to somewhat around 8 point some number, yeah, which is definitely more than 5.5. I just checked randomly and it was more than 5.5 lakhs. So you don't need to, this adjustment is just for confusing. Okay, more or less, not a big deal, you will find out. So this is 5.5, expenses accrued was outstanding. Anyway, you will consider it for computing the total net assets, but for considering the cash, okay, position, you will reduce only 5.5. The actual management expenses only 5.5. Now, closing cash balance, for finding closing cash balance, you will reduce the 5.5 only, but for finding the total the net assets, you will consider this 50,000 also. Anyway, the question is there, simple and straightforward. Okay, calculation of NAV, closing NAV is the question. Copy paste question only mostly. So new adjustments given, old question. Okay, and 6B, question number 6B, derivatives, derivatives study material question, abandonment, this abandonment, okay, option, which means real option question. If you see the study material, see they have included the real options topic, that earlier in the syllabus 2016-17, at that time it was under capital budgeting. Okay, it was under capital budgeting, real options and capital budgeting topic was there. There they used to put this abandonment project based question. Are you listening? Now this question in the new institute module, it has been put in under the derivatives chapter, derivatives analysis and valuation chapter. There you will find this real option based question, abandonment option, illustration number 5, I think, please go through. I think it is illustration number 5. You can see the ditto same copy paste question using risk neutral model. While covering options, I would have covered risk neutral models for so many hours, and this model will be applied for abandonment options. Simple and straightforward question only. Go through, okay, this existing question, hence I am not categorizing new question. You might not have prepared this question, but it is existing question, and from the study mat only directly copy pasted. Sorry. 6C. Okay, startups theory, straightforward question, no need to discuss. Every attempt, mostly, okay, every alternative attempt they ask a question related to startups. Okay, next 6C, securitization theory. This is a totally new question. Okay, this question I wanted to just clarify here. See, in question number 6C, okay, a special purpose vehicle, this question is about security and different. Okay, see, the structure of the deal wants to design instrument that can cater to different investor need. 3 different options are available wherein you can the instrument will differ. Okay, in first case, a simple structure where all cash flows and assets are passed on directly to the investor on proportional basis. I told you this is nothing but pass through securities. And second, okay, more flexible structure where SPV can issue its own instrument. I told you there this is nothing but pass through securities where the debt securities can be issued by the special purpose vehicle. Okay, this is pass through security based. They just wanted to classify. And the third one, okay, this is nothing but stripped security. Stripped security, I told you, highly specialized structure where the cash flows will be differentiated. Okay, where the principal portion and interest portion will be segregated, and this is stripped security, I told you. Okay, all this I have mentioned. Okay, so this is about securitization. This also new question. So in essence, if you see, total existing questions were tested for 84 marks. Okay, existing questions, right? And 34 questions were totally new questions. If you see, out of these new questions also, if you see the weightage, 84 marks and 34 marks were tested. Now, this 84 marks, if I say the easy, difficult questions alone, if you see, from the existing questions, I can classify the real option, okay, question. One is that real option question. Okay, then there is, yes, the sharp optimum portfolio. Okay, so the sharp optimum portfolio and the abandonment real option based question, I feel, okay, how many marks will be the sharp for 10 marks, and the abandonment project was for 4 marks. So I can say that out of this 84 marks, 10 marks were totally difficult, even in the existing, this is existing questions. Okay, you can see in the material, these questions are available. But out of this, even 10 marks are difficult level, I would say, because no one would prepare well these portions. Balance 74 marks, I can say these are, okay, doable. Doable in the sense, yes, if you are prepared well, okay, it should be fine. Out of this 34 marks, okay, I can say the easy portion and difficult portion. Easy portion, I can say here, difficult portion, first I will come to the difficult area. I would say that from the new questions, okay, costing, this is easy. New questions, break-even FSP, I'll give you 2 marks for that, because 4 mark question, 2 marks. EFR, I can say, yes, new adjustment is there, confusing, so it might be difficult. So initially, there 6 marks, 6 to 8, and 8 marks. Then interest rate cap and floor, I cannot tell as difficult. Anyway, securitization theory, I can take it as difficult. So roughly around 16 marks. 16 marks inclusive of that. Okay, I'm saying 16 marks roughly 16 marks would have been difficult from the new portion. And the balance, okay, if you see the 18 marks or something, even though the questions are new, but still it is doable. The political risk thing and initially the intermediate, okay, contribution, profit, all the MCQ given, these things are very much doable. So this is what I felt genuinely, but still many students, the question paper was different. This attempt, the question paper was different. Every last, if you see 3-4 attempts, they have been asking, okay, few reverse working based questions, yes, but mostly predominantly copy paste question only they are asking. Okay, entirely new question, they did not ask for these many marks. Okay, that's the only new observation. But my takeaway from these, I can summarize the takeaway from this discussion as follows. See, what is to be done for May examination? Whatever has happened. For January, whatever happened, so happened. But for May examination, what you can do for improving yourself in the sense, okay, if you have written in Jan and expecting to write again, then this is the situation. Or if you are trying to write for the first time, then also there are few learnings from this attempt I wanted to summarize. See, Exhaustive coverage of entire syllabus is required, because see, just because they are not asked the question for past 10 years, you cannot ignore it. I told you, they're asking. Just because they have not been asking this concept for so many years, like break-even, FSP and all, they are testing. Like this, I don't know what they could ask in the next attempt. I cannot predict. Okay, prediction and doing all these ABC analysis, all these things are little bit, tricky. In the sense, it can work out when everything goes fine. Okay, if your time is not favorable, I don't know what can happen. Okay, you have to prepare for the best and then expect anything. Expect the unexpected and go for the examination. This is what I would suggest. Prepare thoroughly the entire syllabus. First one. The pick and choose approach should be avoided. That's my humble request. Next is focus on conceptual clarity. The entire syllabus, if you see, our subject AFM, okay, is very conceptual. It's not as lengthy as the FR or direct access, but it is very conceptual and tricky. Very technical in nature, which means you have to understand the concepts well, then you have to properly revise it also, because you will forget also easily. That's the only thing. Focus on the conceptual clarity. Doing sums alone is not enough. Like you can practice a number of questions, but again new questions can be easily framed. I just told you, see, I have got the feedback that the paper was very difficult from so many students. But whoever I have asked, generally it's above average or difficult. Why they felt it difficult? Because they would have practiced the existing questions. But only if I tinker, if I alter a few questions here and there, then they are not able to solve the question. What is the situation? Then you don't have the conceptual grip over the thing, like subject, right? Then it becomes tricky. Like you know how to solve existing questions, but you don't know how to solve new questions. That should be avoided. You should be conceptually thorough, right? This comes to conceptual clarity. Next, selective trend analysis based preparation is to be avoided. Okay, which means the past 4 years they have been asking. So each chapter you can consider. Okay, that is how people are doing. Like in the past attempt, okay, this in the chapter bond valuation chapter, these questions were not asked in the past attempt. Hence, these areas can be tested in this attempt. This should not be the thing. Anything can be asked. If you see the sharp optimum portfolio which have been asked to this attempt can again be asked. This is what I would say. You should be prepared. Just because you have people think like that. Last attempt they have asked. So this attempt they may not ask. I have seen papers where previous attempt they have asked and the next attempt also they have asked. Okay, so that should be done. It is very misleading. The trend analysis, all this analysis you can do while first time you should understand everything fully, read fully to solve everything. Then if at all you don't have time when you are nearing the examination, at that time you can select few topic to be left out which is too cumbersome for you. That you can do anyway, everyone does it, no issues. Then ICA SM, okay, practicing ICA SM questions alone is not enough. What do you have to do? You have to consider all the ICA sources. There are past examination questions, RTPs, MTPs, everything you have to have the compilation. Any question bank you take, or not only my question bank, there are so many question banks available in the market. You can take any question bank which is having compilation of all these ICA based questions, okay, past RTP, MTP, examination questions, because SM will cover only few questions. There are so many other questions which are very unique and asked in past examination. That also you need to prepare and go. Next, proper time management is to be done, because AFM generally, okay, is not a lengthy paper till now. Till now I have not seen this much lengthy paper in the sense, okay, there was there November 20 paper was there, and that also new questions and lengthy, that was also lengthy. Now you cannot say, but generally what is the understanding is FR paper will be lengthy, but AFM will not be lengthy. Only thing is, if you know, you will get the marks. If you don't know, you will just sit idle there. That's the only possibility for AFM. This time what they have given now, they have given lengthy paper. I also to solve these many questions, it would require more time. Because of that, okay, it would put pressure on you during the in the exam hall. That can be overcome only through proper practicing of these questions, okay, and time management, which means you have to keep on practicing these questions. As much you practice, you will get better results. That's the only possibility. So these are all the key takeaways from this examination. Okay, this is just this is just my analysis and observation. Don't think every person, okay, every student will have their own perception also, right? Their own preparation level, their own perception level. From my perspective, as a faculty, from my perspective, this is what I believe the paper's real situation is. This was the real situation. I cannot say that this paper was entirely out of box or difficult paper, and I cannot say this paper is easy also. Because of the past few attempts, the expectation is created, overall expectation is created that there will be no surprise element in AFM paper. This will be routine paper. This is what people thought. But now when there is a surprise element, then only people start to get, okay, realize the thing. Okay, we need to prepare well. Then we need to prepare comprehensively. Yes, thank you, and all the best for your results. Okay.